Heidi ho, everyone, and welcome aboard. I'm sorry you can't see me at this point in time. It is simply because my camera won't start, and that's a software problem, not a my problem. It's all to do with the control panel on Zoom. Zoom, oh dear. I'm showing a chart of, my name's Geoff, by the way, and we're about to start our weekly trip around the world and have a little bit of an insight into what our traders are thinking as the week ahead approaches very, very quickly. I think I still can't. You might be able to see me now. Hello, everyone. There we go. Camera working. Excellent. As I was saying, we're about to start our weekly trip around the world to see what our traders are thinking of the week ahead. And I'm just having a little quick squiz at a few of the interesting points that came out of the last week. All of these, let's call them main players, shall we, like gold, had a pretty good week last week after a dismal couple of months, one would have to say. Of course, we're at a support level and have had a little bit of a boost on the previous week's rally. Silver, exactly the same, big week for silver. NASDAQ, exactly the same, 2 weeks in a row for the NASDAQ. S&P 500, exactly the same, 2 weeks in a row for that. And of course, mainly it swivels all around this thing known as the US dollar. Be very, very interested to see how Orlando thinks, or what he thinks about the US dollar as we get into our show. But before we do that, a lot of these things, of course, are based around fundamentals. And I'm wondering what Lexi is making of it all. Are we turning around, Lexi, or are we expecting more of the same? Is this just a little covering rally or not?
Hi, Geoff. Yes, I think one of the things I'm going to be talking about today is the US dollar. I mean, it is the current big topic that we are seeing around the globe. So hopefully, I'm going to flash you guys a couple of information and, let's see whether we can work our way around the US dollar question.
It's a big one.
Yeah, it's a big one. Okay, I'm gonna share my screen and I'm gonna share with you guys some charts and some pictures. So this is a CPI chart for the last the inflation chart for the last 150 years. All right. So these are the events that have been what we say causing inflation historically for the last 150 years. So we have the banking pandemics in the 1700s, in the 1870s to the 1930s. We have World War I, the Spanish flu, World War II, Great Inflation 1975, the dot-com bubble year 2000, and of course now currently we have the COVID plus post-COVID pandemic 2021-2020. So I think if they add on to this chart in 2022, they have to add the Russian-Ukraine conflict as well. So a couple of things. I think the question is: is the US in a recession, and what happens then? So for those of you who are probably a little bit new to economic definitions, I'm just going to do a very simple. Guys, go Google definition of recession. So I think the main basic definition is that it's a recession just means there's low economic activity. And by economic activity, it means basically you don't have jobs, hence with insufficient jobs, there will be low economic activity. All right. So it doesn't quite mean that the GDP shrinking is a low economic activity. And bearing in mind, the GDP is a lagging indicator, right? So the GDP figures are lagging, but the unemployment figures are released a lot faster. And the unemployment figures, if we look at trading economics, doesn't show that economic activity is lagging. So if you look at the jobless rate for the US for the past couple of releases, right, from January to April all the way, you can see that employment is actually increasing. So where is the inflation coming from? Where is the recession talk coming from? It's actually a combination. So after the pandemic, right, or during the pandemic, we had a supply chain problem, right? The ports were getting jammed. The cost of shipping, I think, went up 4 times. So if you were shipping, and I think if you were trading with any other country, you realize that the ports are delayed, shipping is more expensive, shipping has gone up 3 to 4 times depending on where you live. So we had this supply chain problem. And of course, if you think about it, if it's going to cost 3 to 4 times more to ship the goods into whichever country you are. What are the corporates going to do? The corporates are going to pass on the pricing to the consumers, right? So this is where we find that, okay, our regular goods that we usually buy are now more expensive. So during COVID, it was a supply chain problem. Whether or not it's fixed right now, I think supply chains has improved, but it is still facing a expensive shipping issue, because China is still in lockdown, right? China is the major exporter of the world. We have the Russia-Ukraine war happening, so shipping lanes are disrupted over there. And then, of course, we add the Russian-Ukraine conflict, which causes the price of oil to be a big question mark. And when I say question mark, I would like to just share with you guys the trading view chart of the oil prices, and just to see where we are pre-war and post-war, right? So if we look at the trading view charts, I think it's really going to be really interesting. And what I've done over here, all right. Basically, if you Google when did the Russian-Ukraine war start, the official date that came out was 24 February 2022. So if we put our marker over here, you can see 24 February. I'm just going to put a vertical line on this 24 February over here, right? This blue line over here. So basically, the moment Russia invaded Ukraine, right, the price of oil become a question mark. Why? Because, Russia is a supplier of oil, US is a supplier of oil, and then there's this whole talk about, is there enough supply? Is there not enough supply? And then we have Russia selling to India regardless, Russia providing to China regardless. So the actual supply and demand of oil becomes a question mark, because what's happening behind the scenes as retail traders, we don't quite know. We only know what the newspapers are coming out, right? And one week they will say, Russia is actually supplying oil to India at a cheaper rate. The next week they say, okay, there are sanctions on Russian oil. So price became, you can look at the candle, just look at the candlesticks pre-war to post-war, right? The post-war candle, or I would say when war started, the candles become very big, very unpredictable. There's basically a lot of question marks happening in the oil side. But as corporates, right, so shipping is expensive, oil is expensive. So it's going to be more expensive to fuel the ships to come in to wherever you are. And that, of course, where does the price go? It passes on again to the consumer. So it's like a double whammy there. We have the shipping cost, and then we have the oil cost. Even petrol costs us more now, when we pump our petrol in our cars, our tanks, right? But unfortunately, we are not going to stop pumping petrol. The demand is still there. And if the demand is still there and the supply becomes a question mark, what happens? It's a pure demand and supply issue. Prices go up. So inflation continues going up. So what the Fed is trying to do now, the Fed is trying to push down inflation by doing what? By increasing interest rates. But the problem now is, can high interest rates actually stop inflation? All right, and this is where it gets even more murky, because you have high interest rates, which means cost of borrowing is going to be higher, cost of investment is going to be higher, right? If you're going to borrow money to buy a house, buy a car, it's going to increase, right? So what's going to happen again? We are going to pass all these costs back to the consumer again, exacerbating inflation. Interest rates increase is supposed to deter spending. All right, but due to the pent-up demand, the 3 years of saving money, not traveling, nowhere to spend the money, those money is still floating around. The trillions of stimulus checks that the government has given the people, they can't spend it on holidays and stuff like that. So those money still floating around. Now when markets are finally opening up, you have your airfares coming back, your tours coming back. So there is still a demand for spending. All right. So all this is pushing inflation yet higher. And this is one of the reasons why inflation is higher. So what are the ways to fix inflation? I think the very first thing is we have to figure out whether or not Ukraine and Russia stop fighting, where there's a bit of clarity on the oil cost, because the oil cost, I think it's incepted in a lot of production costs in a lot of goods and services. All right. So until there's more clarity over on the Russian and Ukraine side, we are going to see continued high inflation. It's not going to be fixed within a couple of months. Hopefully it's fixed faster, but it doesn't look like the statistics support that issue. And then on the other hand, let's talk about the US dollar. I'm going to show you another article. Now, I think a couple of weeks ago, I spoke about bonds, right? And how I think the bond market is going to get a lot of attention. And then this article was 16 hours ago, so it just came out yesterday. Emerging markets hit by a record streak of withdrawals by foreign investors. So exactly what I was talking about. The emerging markets are countries like, Chile, China, Colombia, Malaysia, Mexico, Philippines, Poland, Russia, Saudi Arabia. So money is coming out of those emerging markets, but where is it going to? Right? Where is it going to? And if we look at the interest rates, of the US right now. US is having a 2.5% interest rate. Okay, 2.5% interest rate, which means it implies the bond yields, the attractiveness of its mid to long-term bonds are there, right? If you are pulling your money out of emerging markets for this fear of recession, where are you going to park it? Right, the next safest parking place would be in the countries with a slightly higher interest rate, like, for example, the US. And so what's going to happen to the US dollar? I suspect the US dollar is going to find renewed strength after people realize that, there's nowhere else to park their money except these couple of countries with a higher interest rate. So US, New Zealand, we should be seeing some attraction into New Zealand bond prices, US bond prices. All right. So despite the temporary, I would say, a knee-jerk reaction to this temporary fear of recession, I seriously doubt that as long as employment is low, people are still going to spend money because they have jobs. If they have jobs, they will spend. All right. So I think for the US, the retracements, I will call these retracements, the pullbacks are probably really good for US bulls, and for those who are looking to find a leg into cheap US bonds. All right. Because, exchange rate wise is going to be in their benefit. It's a good time to buy their bonds, shift their money somewhere safer despite all these fears. So I still, for the next, I think, couple of weeks at least, until Russia and Ukraine has something clearer, until China is done with its lockdown, I think we are still going to see continued dollar strength because there's nowhere else for money to flow. And that's all from me today. Thank you, Geoff.
Thank you, Lexi. You're a fan of the pullback.
Yes, I'm a fan of a pullback.
It's a very complex web that's been woven here, I think, and trying to sort it out very quickly, as you point out, is not going to be an easy task. And wow, what's this space, I think. Thanks, mate. Have a great week ahead.
You too.
All right. Speaking of the US dollar, and that chart won't change too much in the near future because we're going to say hello to the deepest voice, of course, in trading and catch up with the big O in Salvador.
Hello, traders. Orlando here. Why don't we talk about the US dollar, right? So we are going to look at the DXY. All the daily chart, I am looking at that 2000 to 2002 pivot point. Let me just show you quickly what I'm talking about on the 2-week chart. I'm talking about this key level right here, right? So let's go back to the daily chart. Actually, I'm going to go to the 2-day chart. And the level that I'm looking for buys on the USD, because I am still looking for buys on the USD for a break of that 109.40 level, let's call it, or actually May highs, right? May 2022 highs. So let's go to the 4-hour chart, and then we're going to go to the 1-hour chart so we can find actual entries. So this is the this is 1-minute chart. Let's go to the 4-hour chart. So on the 4-hour chart, what I'm looking at here is this. These are June highs. So let's plug a horizontal line. So there's 2 possibilities here, right? Even though I am bullish fundamentally on the USD, this market is bearish at the moment. The reason that this market is bearish at the moment is because price has been printing new lower highs and new lower lows. But this level, right, the one that I'm talking about, June 2022 highs and May 2022 highs, this level right here, is my buy. So remember that support levels are not straight lines, they are levels. So basically buying right here and putting your stop losses below Friday's low would be burning money. What I'm looking at here is a possible open on Sunday lower, right? For you guys on Monday lower, and a rejection. I wouldn't be a real buyer until the short time structure of this market breaks. So the level that I'm looking at for a bullish continuation is a break of the 106.75 level, let's call it. And I would be very interested in deep buying around the 105 level, 105.10, let's call it, on a rejection of these lows. So there's two scenarios, right? An open lower, right, on Sunday, a rejection of the 105, and here I will look for an amazing risk to reward long on the USD, or some kind of a uh, tumbling market, let's call it, right, and a break of that 106.50. So what markets I'm looking to play long the USD? I haven't looked at the charts, and the USD Mexican peso, it's always the one that I'm looking at, but it looks really, really sketchy at the moment. Let's have a look at the Euro USD. Um, right, the Euro USD closed on Friday. I would say kind of a bullish, but just have a look at the forward chart, right? The forward chart shows an extremely good level for shorts on the Euro USD, which would be, in fact, a long play on the US dollar on a retest and a rejection of June lows and May lows. So a rally towards that level, a rejection towards that level, would bring an amazing opportunity for a short. And if we take an entry right at this level with stop losses above the previous highs right here, and first targets at um, last week's lows, that would yield a 3R trade. So that's what I'm looking at for next week. Of course, I am not, um, I mean, if these scenarios don't play out, I will not um, flip short on the USD. I am looking for USD longs and USD longs only. And, trade safe and have a great trading week.
Okay, that's 2 out of 2 for pullbacks on the US dollar, pretty much, and that probably means gold and silver and the Nasdaq and the S&P haven't yet got a good footing to trade them or to buy them anyway. According to those two people, I'm wondering, and I know he's a favorite of reversals, I'm wondering if we're going to play baseball in South Africa and say hello to George. G'day, buddy.
Geoff, how are you doing, mate?
Mate, you look very, very relaxed for Sunday morning. Is it morning still?
It's 20 past 11, and beautiful day, almost 2/3 through our winter, but you got sunshine today, so it's a fantastic day.
Yeah, we've just moved a little bit further south of the equator than where the Big O was talking to us from. I think he's around about 12 degrees from the equator. You're about 25, 26 maybe, where it's far more to my liking, I've got to say. Mate, are we reversing or are we retracing? What are we doing?
Let me show a few things on my charts very quickly. Then I'll talk about my my preference to look for reversals.
Excellent.
So I've just got UK 100, German 30, S&P 500, and Hang Seng 50. And then we'll drill into just UK 100 to look for setups. So how I look for setups tomorrow. Now, what is interesting is what everyone has pointed out is if you look at the last candle, that's Friday's candle. In three markets, a lot of bull strength. Okay, so it's UK 100, S&P 500, German 30. But interesting enough, Hang Seng 50, huge selling on the day. So what then interests me is always the context, which is the last 3 days, and also the overall chart pattern, which I just call for the need to sound intelligent, fractal analysis, huge analysis. So have a look at UK 100, although we had a huge bull candle on Friday. I mean, I'm always interested in what happened the last 3 days. This bull candle, does it correspond to what I'm seeing in the last 3 days? And it's not in the terms of continuation, because that's an entry above a bear doji candle, an outside candle, which for me is a trading range price action. And whenever I have trading range price action, I expect any breakouts up and above to fail. So we also trying to break out above, these double tops here. And you can see every time we go to it, failed, go to it, failed. Bulls had a chance there, yes, good bull candle, but all they needed to have given us for me to say, hey, bulls are taking control, is another bull candle the following day. And we failed on the Thursday for that. So UK 100, I'm going to be looking for shorts. Now, here is a big caveat to the whole thing. Although I'm going to be looking for reversals for shorts, the fact that I had a bull candle on the day, it means when I open my charts, looking for that first candle and the first patterns, I'm going to be looking for early continuation by the bulls, okay, because they had strength on the day. Looking for early continuation that will fail, which means I'm looking for the creation of a potential tail on the day. So if I let me pick up this candle here. So bulls bought up right from the open and then it failed. So there was a tail on the day. So when I go into tomorrow, I just pop this on the 5-minute time frame. So guys who kind of follow my talk about price action, these are the big typical setups, high of the previous day. So that's high of Friday, green line, and red line, low of the day. We have the 50% point here. We don't know, of course, where the market is going to open. So that would be my magenta line, purple line. So when the market opens, I'll be very keen to see whether we're going to gap up. So the bulls follow up that strength, or we're going to open within the same level, or we've got a gap down. All of that will start to give me information in terms of what is likely to happen on the day. But just linking to what I said earlier on, I'm expecting, whenever I say I'm expecting, of course, higher probability, 60%, 100% certainty that there's a 60% chance that the market will go up initially. And if we do that, of course, based on what I see on the first few candles, I'm looking to see if then we fail. So we create a tail, potential tail on the day. Then if we see that failure, that reversal, then I'm going to be selling. Having said that, of course, I don't sit on my hands waiting for that to happen. So based on the open, if there's sufficient strength in terms of the patterns that I see from the bulls, whatever it may be, giving me patterns to buy, I am going to buy until I see a reversal. Then I'll come out and trade the reversal and go all the way down. So on UK 100, looking for probabilities of going short, of course, based on that candle here, failed breakout. If I look at, other one that I had was German 30, bit of a different story, but also interesting. Strong bull candle on Friday, following another strong bull candle on Thursday. Now, if you had been in the market, you'd have seen that this candle was created at the end of that news announcement that we had. But in any case, so as far as the bulls are concerned, they're thinking, hang on, breakout, pull back. This is a bit of what I was trying to talk about in the UK 100. Huge bull candle, fantastic for the bulls, but you always got to look left. Very poor signal for the bulls. So you always expect a failure after that. Then you get the pullback. Thursdays was a bit more positive for the bulls because they're buying above the bull candle. Then we have the follow through. Now, follow through is interesting. Bull candle, but it's a breakout above this pullback. It's also a breakout above this lower high. So these are key levels of resistance that the market is breaking out above. But the bulls have to get above this high of 16th June, because that for me is a key lower high breakout, pullback, lower high. So going into tomorrow as well, because of the bull strength, I'm going to be looking at the open. If I get opportunities to trade from the open, decent buy setups, I will buy until we get to here. And if we create a reversal pattern, that's my cream for the day. That's what I want to get into. If the bulls fail to break above that high, which would be confirmation of their failure to break above this double top. So looking for reversals, but I'm not going to deny myself any opportunities that come up. Just one last one, Geoff, S&P 500. Now, look at the three candles analysis. So tomorrow morning, I'll be looking at last three candles, three bull candles. Bulls they have broken out above this expanding triangle, which is one of the breakout patterns that we see. If the bears were able to hold this pattern, we should have turned already within here and had a distinct expanding triangle. But we didn't, so bulls are strong enough and they've had follow through. What the bulls need to show to take control of this S&P 500 is to really break above the commencement of this bear breakout. And this yellow or gold level, depending on how it shows on your charts, is a cluster of resistance levels here that the bulls have to get over before we can say they've controlled the market. Higher probability for bulls at this stage than the other charts, but they need follow through and pullback. Going into tomorrow for me, I'm less cautious about looking for buy opportunities in this market in spite of the bull candles, because of this little Friday's candle. Bull candle, yes, but tails on bottom, tails below are a concern for me. If bulls are strong, I don't mind tails at the bottom, sell-off and acceleration, but tails top and above kind of indicates that the resistance is coming to play. Bears will defend this. I mean, if you just look at this without much analysis, you can see how the bulls tried to get up, but they failed, eventually leading to the breakout. So I will watch the S&P 500. The beauty about the S&P 500, unlike UK 100, German 30, or Euro Stocks 50, I don't have to worry too much about trying to find trades the early part of the morning. I'll start to look midday, my day, towards opening the US session to see how the market is reacting. So those my thoughts might still predominate in my mind, of course, reversals, but take advantage of any opportunities that come before we get there.
Cheers, mate. Sounds like we've got two retracement people and one sitting either side of the fence, and I like that position. I think I'm on either side of the fence as well at the moment, mate. Trading buddies, Ash and I are on summer holiday at the moment. They think so in Tasmania, where it's about 3 degrees. Okay. But your show goes on Wednesdays, right?
My show goes on, live trading profits, on Wednesday, 9:30 a.m. GMT time. So we're on for 45 minutes. Looking forward to that. Yeah.
Fantastic, mate. And we'll catch up with you back in Trading Buddies on Monday week. Looking forward to that.
Super duper, we'll be there. Thanks guys.
George.
Okay. All right.
All righty. Let's talk currencies now. And in the main, I've seen a little bit of market sentiment creeping in each day in different directions. I wonder what the indexes are telling us. Lloyd, my good friend. How are you, mate?
Hi Geoff, long time no speak. I think the currency
Yes.
index is showing us a very interesting picture. I think it's setting up itself for some big move if I'm right. Otherwise,
Yeah, we seem to be kind of on a little bit of a teeter-totter at the moment, but ready to bounce or go in the same direction. Not sure which yet.
right. So just let me show you my analysis. Yeah, I've been actually rather quiet for the past 2 months. As in, I still trade, but my risk has been rather small because I've been waiting for some bigger move to set up. It might be coming already. So the first on my list, the highest on my list in terms of strength is actually the Canadian Index. So you can see that it's actually sloping down, no doubt. Just that I don't really use channel on my analysis. I just prefer lines. But on the other side of coins, I always say that the Canadian Index has been on a range at this level between $80 and $77. It has a false break. Now it's being back up right into the range, and it's still actually at the bottom of the range. So I think it has lots of potential to reach back up to 80. So remember, I'm on a weekly chart. So if the weekly chart shows that it has so much ample space, it's good to go on the 4-hour and trade it. Yep. So the CAD index, the Canadian pairs, are something that I'm going to keep a lookout for the upcoming week. Upcoming next 2 weeks, in fact. Next on my list is actually the Kiwi Index. Interestingly, very strong downtrend. But look, on the weekly chart, what we have here is really a very 2 candles break and retest. Not a very strong one, but still looking at the rejection, buyer bar. So this effectively form a 5 candle fractal, and then last week it's just a very nice break and retest. I don't really see a strong horizontal level all the way until $65. So again, very nice levels to trade from. Next, the yen. Yen is really on a no man's land. To be clear, yeah. Even if we scroll all the way back, it's really in no man's land. Yeah. So I still think that yen is very much governed by the sentiments at the moment. But looking at 2 weeks of really intense buying, we have a bit more space left before it hits a very strong, not very strong. It hits a technical horizontal level. Yeah. So we got quite a fair bit of space to actually play. Now pound. When I zoom out pound all the way let's look at 2018, 2016, the 120 level, really strong level. We have a false break once. Very next week, it bounced back, and we have almost similar play, break, and now you can see that the pound has recovered very strongly. Now in terms of reversal, and I'm looking for those big, really big trades. It's just very recent that price was at 2021 May. Very recent that price is at 140. Yeah, so for those really reversal traders, I think we can easily go for really those nice big move if you are patient enough. Otherwise, from 120 trading back up at least to 130, 126 level, this is a really viable move to for the pair to play out. Yeah, so keep lookout for pound. Lots of potential, not really clear yet, but the potential is huge. On the other hand, on the flip side, euro, I would rather stay off this pair at the moment. Isn't really giving me a very clear idea what it wants to do. It bounces off the $100 level, seems to be heading back up to about 104. Yeah, but looking that we have really small space to play at, I'd rather keep out at the moment. Not very confident at euro. Aussie, on the big picture, is sloping down. Yes, price has recovered back up to $70. My best guess from this level, you can see that in the past, it has nice rejections. Yeah, so either I'm prepared to short if there's a break and retest to the downside for the 4-hour, or I'll be staying off this pair. Yeah, it's at a very strong horizontal level. Swiss, again, now we cannot ignore the midpoint between 110 and 100 level. You can see that this midpoint has performed very beautifully in the past. Yeah, so as such, Swiss and Aussie, I put it in the same cluster. It has potential to go short. Yeah, and this will be a pure reversal move. But I will still stick to my basic setup. I'll still wait for a 4-hour break and retest. Yeah, but noting that Swiss and Aussie, the downside potential is larger. The last on my list, which is the weakest for the moment, is actually the dollar index. Now I do agree that the dollars is due for a retracement, and we got really about $5, about 105 to about 103. Yeah, it should retrace back to this level, and then we shall see what's the play at then. Yeah. I don't think it's a pure reversal because dollar has been rallying for a long time. Yeah, but for a retracement move on the weekly chart, long overdue. Now, as such, let's have a look at the last two pair, which I actually had a play dollar yens, which was my last analysis. Very nice 5:1 trade. From then on, it falls off. Euro CAD, I had a stop loss once, and then so this was my analysis. Then it went back to this level, and I'm still in this trade. Just gonna see how it plays out. Now, for the upcoming week ahead, what I'm going to take note of is actually dollar CAD. Just you can see on the 4-hour chart. So I'm really trading the dollar, the DXY against the strongest, CXY Canadian Index. A break and retest is in play, and then I was trade it all the way to 1.25. I'll see how that turns out. Kiwi Swiss will be another of what I'm looking for. So it's really the second strongest and the second weakest. You can see that prices on a range now, at the bottom of the range. Very nice. So this coming Monday, if I have a bullish bar at the very start, I'll actually jump in. Really looking for a bullish close, or if the price action is a bit iffy, I'll just wait for a classic break and retest, and I'll be happy to go in. Now, worth noting is actually, I rarely trade gold and silver, but let's have a look at silver on a weekly chart. So you can see that price on a weekly has a very nice reversal bar, bullish engulfing bar. Yeah. So on a 4-hour, we do have a play over here. So what I'm waiting for is really this. Let me highlight. Want to make a guess what's my next move, which will be something which Geoff has influenced me till now. I don't know where's my arrow, but same thing. Oh, that's the wrong color. A break and retest, and I'll see where it goes from there. At least it is tradable to this level. 22.5. So that's why additional bonus will be a silver play. Similar for gold, it will be the same region. All right, that's all for me, Geoff.
What a play that is, mate. Break and retest. I tell you what, I was listening to every word you said then, and the best word you said then was that the Aussie's going to $70. Wow, I can retire. You meant 70 cents, of course. But thank you for the encouragement. I'm really looking forward to that. Mate, have a great week ahead, and keep those trades coming. They're looking very nice. See you, mate. Good to see you. All right, everyone. That is pretty much our show for this week. We've been pretty much all around the world, across the equator, up and down, across the world, as we always do on a Sunday. And thank you for joining us. A great turnout today. We appreciate that, and hope you've gained something from the show. Trades a new month. Pinch and a punch for the first day of the month tomorrow. I hope you have a wonderful week ahead, and continue to trade safely. Pick those good ones. Have a great week, guys. Thanks to George. Thank you to Lloyd. Thank you to Alexis. And, of course, thank you to Sam for keeping us all in check. And Orlando from the video. Have a great week, guys. Bye-bye.